Good evening. It is 7:17 on Sunday, October 30th, 2022, and doing a quick trade plan review for Friday, October 28th. This one should be pretty simple. We had one plan out of the five that worked quite simply. And looking at the daily chart, I want to put a couple points I want to make here. So the big green bar here from Friday engulfed Thursday and it engulfed Wednesday. So we've got a double engulfment here, which tends to bode for more continuation. There is still room if you look to the left on this day, the 21st of September. This is one of those days that you can see the short covering going on. If you look back on your chart and kind of watch how the price action would unfold, we still have some room. We haven't taken out the high of that yet, and that may be in the works. However, we have taken out the open, so I don't know how much is up here to go yet, but there also is a potential target of 39.3075, which is the 100% extension of. Now, I actually highlighted the lines here to demonstrate something. So it's a 100% extension. You can see this measurement from here to here to 39.3075, which is equal to this distance in range. Okay, it's exactly equal. And this move up, we've seen some couple things indicate it's a corrective pattern, right? It may not be totally, but it's right now it's behaving that way. And what that means is that it's there would be a resumption in the downtrend at some point, but it's within parallel lines. And right now it's doing a zigzag pattern, which is the ABC, which is a corrective, very common corrective wave, being within parallel lines. And then we have divergence on the volume. We're going higher, but the volume's gotten lower or dropped off, right? But we still have a bit of room to go to take out this high, and then above that high, so the high is at 39.2525. 5 points above it's 100%. I think that could be knocked out. And then above that is 127.2 extension. I don't recall now where I got that from, but there it is, and that's on there for some reason, and probably a good reason. Anyway, there you go. So that's what's going on in the daily chart. We have the engulfment of two days, which could bode some more, at least enough to get there. And we blew through, after probing a couple times, the 50 moving average, which is at more of a downward angle than the 100. The 100's kind of leveled off. And yeah, we'll see what happens, of course. Moving back down to the profile here. On Friday, we pretty well one-time framed up the whole day. Just a moment, move this out of the way. Okay. We opened in range below value. Interestingly enough, on my stories, and I don't know why I chose to change it, but stories 1 and 2 were in range below value. I think because while I was writing this, it had opened. I don't remember now. It's been 3 days, but I changed it to number 3, open in range in value. I think because it looked like it was going to open in value at that time. But either way, I do believe I mentioned something about this in the pre-market trade plan video, that it's really hard to know where it's going to open when it's so close. I mean, we were trading below value, then in value, then back below value. I mean, right on the edge, you know. So I think I was talking about in the context of I'd really like to get these videos out well in advance of the market opening, but some days it's just you just don't know how it's going to open. That can really affect how I want to narrate what may happen. All right. Well, anyway, let's just knock out a few of these. Okay. Using the black pen here. Open in range below value, reject value area, and prior day's range, trade lower. It did not trade lower, so this number 1 did not happen. Open in range below value. I mean, where it opens is not too critical to how the story plays out, but it is critical to it. Well, not critical. It is important to me where it opens and what may happen next. Open in range below value, probe lower, rejection from prior low of day or lower prices. Well, this kind of happened, but it didn't. It didn't get to the prior low of day. So you could say this kind of happened, but the next story is more important. We'll let the market shake out. Watch for probes lower to be rejected. Careful getting long anywhere below settlement. Overnight high. Okay, well, anyway, let's just cross this out. Really not important. But I will say the fact that we did not get to the prior low of day, if you'd read this, or if you were me and you wrote it, this was something to pay attention. So if we had any probe lower, which was the open and test down, didn't give you much time to know if that was going to be, it was not coming back there again. Rejection from prior low of day or lower prices. Then we're going to skip down to number 4. Rotate between or around settle down to overnight. No, it didn't happen. We didn't get down to the overnight value area low, and we didn't get below the prior low of day, so we didn't have continuation. So that leaves us with number 3. Open in range, in value, move to value area high on 80% rule. Well, we opened a couple ticks below value, right? So that doesn't disqualify this at all. It just that's where I thought it was going to open at the time. And thinking we might move out of it and back in. Well, we moved from outside of it, inside of it. And I do believe while I was making the video, I was talking about the fact that, hey, A period made it to the other side practically and completed the value area 80% thing without, it seems like it was that video, maybe it was another one where people can get really technical about it and it's got to follow these exact rules. But the concept is when you come back into balance, whether it's a value area or any other kind of a trading range or something like that, that the tendency is to auction in the auction market process to the other side of that area of acceptance, which is what the value area is. And let's see. So what the strategy was to, okay, let me get my green pen. Can't really see the other one. It bums me out. Okay, so this one worked out. Find long entries, take an inflection point by inflection point higher. Now this means, and I've talked about this before, sort of monkey barring your way up on all the inflection points. You can get long against. There's all kinds of ways to get in. And once you saw what was happening, so I've already changed the levels for. I had to draw these on because I updated my charts before I decided I wanted to actually do a trade plan review. I have prior value area low. This is Friday's value area low. We opened right here. Could not get to the prior low of day, which is here at 38.13.5. Couldn't get to the couldn't get to there, so we couldn't get to the overnight value area high, right? And then you had the opportunity possibly to get long coming into the value area low, or once we got above the overnight high, and have to pull in a minute chart or something like that to see how those, or a tick chart or a footprint chart or something to see where, how you might have traded that. I don't know. You got your own strategies, as I always say. Right here, this line was the 50 moving average. I'm trusting that's where it was at the open because that's when I put this on there. And I'm sure that it is, well, it's at 46 now. This is 44.75, and after that big move up yesterday, it's at 46, so not much of a change. So yeah, this is the 50 moving average, and I've determined that's a critical inflection point in the last several videos. So again, monkey bar your way up. As you can see in A period, we got all the way up to and traded outside of it, and kept on going. So B period, let me split this out. B period made a poor high with A. This is an opportunity for an entry. And anyway, I gotta mind myself to not talk so much about entries, but I know how it is. People can look at something like this and say, "Well, how do you get in?" Or how do you trade it? Well, that's another thing altogether. The idea was to that if we traded if we were in range in value, traded out and came back in, that would be an 80% to the upside. Looking at that, or here we opened outside of it, came in. Technically, you'd want to open up in B before the 80% rule would be in play. And in this case, you'd have to wait to trade all the way back down here before you got long, which would be kind of weird because now it looks like the order flow and everything's back down to the downside. Are we going to roll over and make another go at the prior low of day? I mean, that's where trading can get really difficult to know what to do. But once we came back up this way and came out of value again, now, what's going on here? Let me split this off. Let's look what the value looks like. Okay, it was pretty much even with the prior day's value. However, it's a little bit higher on the low side. You can see the value area low is down here. Now the intraday value area low is here. This is still within value, but, and I don't have the volume profiles on here. I can throw them on here real quick, but it's going to kind of make the chart a little muddy because I've got all the other lines on there. Okay. So one thing that was going on is we did build up a lot of value inside of the value area, and that also could make it a little tricky. But once we got a new distribution up here, right? See this distribution? And you have to start anticipating that, well, we're getting value built up here. So maybe I'll get long here. Well, how do you do that? Well, once again, once C makes a poor high, that may be an opportunity. So when C matches B period high, you could find a way to trade that, because again, odds are high that you're coming through there at some point. And yeah, there you go. So we began, let me merge these back together. Began to one time frame in C period, it's one time framing higher, and then D period, then in E period it stopped one time framing. But it balanced, and so often as it does, it'll balance and then it'll resume the trend. So then we started one time framing again. Now, I would venture a guess that there were ways to get in here on smaller time frames. Okay? I say that tongue-in-cheek, venture a guess. I know there was, all right? But now you have another distribution here. You have the pivot point. Here's and again, back to taking inflection point by inflection point. You have the pivot point, and up here's the volume point of control. Oh, wait, no, I'm sorry. These are not from that day. I don't know what was here now. There were things, though. This pivot point is based on Friday. So scratch that. I only put the studies on here, and that put these back in place. Let me take them off again, because I just kind of hide all studies. Okay. So anyway, there's, inflection point could be the halfway mark between any one of these in a TPO. Could be the open of a TPO. Could be your moving averages on whatever chart you like to trade on as it climbs higher, and you get pullbacks to the moving average and it touches them, that kind of thing. But you can see that it was pretty much a steady day up, closed on the highs. But was it a trend day? No, it was not. How do you know? Because this is the initial balance, and the range extension is roughly equal to the initial balance. There's a normal variation day. So, not a huge net influence of other time frame traders. Why is that important? Well, I talk about that sometimes in the videos, and we'll have to see how things play out tonight and Monday going forward. But it's important because it gives you an idea of what may happen next. It gives you an idea of targets. If you were holding on in here to get way up here, another 10 points. If you were holding on to any one of these and thought the ranges were going to be a lot bigger, because notice how these ranges, they weren't huge, and there's a lot of back and forth all the way up. So it just helps you in a lot of ways. One of them is that you may want to take profits and re-enter. That's one way. You may want to adjust your target, your exits. Anyway, so. Excuse me. So anyway, I guess that's it. One thing we can do is to see. Now, I will tell you that I did not maximize all of this. I think I did pretty good at some point with this, but we're going to look here. So if you got in at the value area, risk the low. You got it. Obviously this is going to be a little bit wild because I'm just going to go for what the full potential was, which I normally don't do. You got in at the value area, roughly the low, and you took this all the way up into the close. That is 85.75 points. That's huge on a one lot. Now the stop here is 8 points, so I mean this is not realistic for me at all. But let's say that you got in, you didn't really put your entries in until, you know, C period took out the B high, and you risked maybe let's see, it's still pretty big. You'd have to look at something else to maybe what to risk. I don't know. Well, one way to look at it is maybe you made a poor high and it came back and you got in somewhere. You have to forgive me on this because I'm trying to cover this whole range and keep this in view, and I can't really see, and I took the volume profiles off, but you get the idea. There's ways to trade where you know your risk based on certain structure, whether it's volume, whether it's, you know, you're below a moving average, something like that, that you know typically the market might struggle to get through for a minute. You know, the odds are that may not get through it, it may bounce off it, or you may get a heads up that's like, hey, I better exit this trade because things are turning. But you took this up and you just held it on for a couple hours, you know, 28 points. You know, I wouldn't have wanted to be hanging in here right here. This is in a whole hour and a half, 2 hours. So let's say you just got in here and you got out because, like, okay, I got to get out of this trade. I gotta go, you know, I'm hungry. I got to make lunch or something. 14 and a quarter points. You know, that little segment right there is a nice move. Okay. Anyway, it's just looking at, you know, just the whole idea is being patient, believing that this plan is unfolding and you're taking it increment by increment higher. Maybe you're going to get long against this high from a couple days back. Maybe when we take that out, and you can see right here, actually this might be a better one altogether. So you got this high of day back over here, and I'm gonna zoom in a little bit on this one. And when D period opens up and comes down, you decide to risk it and risk the halfway mark of C. Okay, so let's say you get in here and took it up to D, just up here towards the high, 11.5 points, and you risk 3 points. That's pretty good, you know. That's worth a shot. So let's say you got 11.5 points on Friday, and you're only here from 9:30 Eastern to 11:30 Eastern, right? And you made 11.5 points, and you took one trade, right? Now, can you sit here and wait for that opportunity for 2 hours? I'll be the first to tell you, I can, but I don't. I don't. I should. I have a trading partner who would take take from 0 to maybe 2 or 3 trades a day. 3 was like high frequency trading for this person, and it drove me crazy because I just kept seeing opportunity after opportunity. But you know what? Their strength was patience. Their strength was waiting till they felt really good about something. Where for me, that has not been my strength. Hey, I know when something's really good and you are compelled to pull the trigger, but there's other times where, you know what, I see something, but maybe it's not really there. I'm not waiting for my plan to set up, and that's the idea of doing these plans every day, is like and reviewing them, because you see how they do play out, but they do take time, and you also see that you can wait for better entries, ones that are a lot clearer. So this entry right here, as soon as I put this red line on here, and again, I don't know who's watching this video, but you may have said, aha, oh, that would have been, I didn't see that on Friday. Yeah, that high right there, it was off my chart. I didn't realize, you know, that wasn't my, you know, I moved my prior high of day to Thursdays, but I didn't have the other day. I didn't have Wednesday's high on there, but we came back up there. And when we opened there, and C traded through it, well, I missed it, but then D opened and came back down to it. Maybe that now it looks like we might have another distribution. We already had a double distribution with C, and we're one time framing. Hey, maybe we're going higher yet. After all, we did identify there was a lot of potential for short covering over here, right? So, in here. So, hey, I mean, see this wick? There's a lot of shorts pushing that market back down hard. It pushed it back down hard on Wednesday. Excuse me. Okay, well, anyway, I hope you've enjoyed this video and maybe gotten something out of it. I like thinking these things through because it helps me a great deal. It's just, you know, rehearse them rehearse them, and then you don't even think about them when in the thick of the battle, in the thick of the moment, or the heat of the moment. Excuse me. So maybe I'll see you tomorrow morning. Make a great evening. Thanks. Bye.